Hi, this is Hyperwave. I am Leah Wald here with Tyler Jenks. I am streaming from Madrid. Coinsbank is this crazy cruise is starting in 2 days. And yes, a lot is going on with Bitcoin. However, sorry guys. So even though it's dropped $350, all this craziness to us, it doesn't really mean a thing. We're actually kind of bored with it. And we're going to look at why. I know you guys are super excited, and that was a bit of a downer, but it's definitely not because at least I'm in Madrid and it's beautiful, and Tyler's in beautiful Chattanooga, and there's a lot of excitement still. So yeah, whoa, sorry I started on a downer note, but Tyler, what are we looking at today? Hyperwave, and also why are we a little bored with all this?
Yeah, good morning, everybody, or good afternoon or evening. This is a very fun time. Tone is over in Paris at a very interesting conference. Leah's in Madrid, and then they're going to be joined by Jimmy and Giacomo, and it's going to get very interesting over the next couple of weeks. A lot going on, but I wanted to do two things today. One is say I'm not very impressed with the drop that we've seen in Bitcoin. Earlier today, Tone from Paris did a brief show where he said the $7,500 level, which is his kind of top, but it could get up to 7,700 or even 7,800 without changing anything. And I feel the same way. I'm not ready to say that we're rolling over here, but we could be. But I'm not particularly excited by the fact that we broke down below 7,000 either. And I'm going to show you why, just getting back to the basics. That's part number one. This is going to be very short. We'll try to keep it to 30 minutes. But please, anybody that has any questions about what we're talking about through the chat, we'll try to get to them at the end. The second thing we want to talk about is there's so much confusion about Hyperwave. Even within our Hyperwave research group that now has almost 35 people that are finding hyperwaves all over the world. And at the right time, we're going to start introducing some of those hyperwaves and what we think they mean. But the researchers themselves are having a lot of trouble, in some cases, telling the difference between a hyperwave and just a very strong stock or an index. And many of you have been making comments about hyperwaves, some correctly and some incorrectly, on Twitter and in the chat. And some people are even posting on TradingView various hyperwaves that they're finding, which is fantastic. But there's very simple rules that have to apply for every hyperwave. Anything that doesn't meet these rules is not a hyperwave. That doesn't mean it's not a great investment. It doesn't mean it's not a bubble and it's going to go much higher. It doesn't mean it's not going to pop like a hyperwave pops. It simply means it's not a hyperwave. And hyperwaves have got particular characteristics that are very important to know because they foretell the future. They tell you what's going to happen, where none of those other things I just mentioned do. So it's important to be able to distinguish between something that looks like a hyperwave and something that really is. And we'll only spend 5 minutes on that because I'm going to go back to the archetype and we're going to look at what the 7 phases are again. So when you're looking at something and trying to figure out if it's a hyperwave, just refer to that. Take a screenshot of the hyperwave chart when I bring it up so that you've got it. And all you've got to do is overlay whatever you're looking at on top of that. So that's what we're going to do. And we'll do it by going to screen share. And I will do it right now. Yes, please.
And so we also have in our Medium piece, right, the archetype. So beyond our little, if you guys want to take it, also pinned to my Twitter wall. Yes, that's what it's called. Sorry, sometimes Tyler and I call it the tweet leader or the tweeter, and we get a little confused.
The Google.
Yeah, the googly, the tweeter. It does have the archetype, and
That's
has
great.
Bitcoin.
That's great. Okay, so what I'm going to do is I am going to pull this up over here.
Bombada.
Maybe.
There we go.
Okay, and first of all, before we get into Bitcoin, we are going to take a look at this, which is, this is a hyperwave. This chart was drawn back in 1979, and it's helped me navigate the crash of 1987, the Japanese hyperwave to the upside, and 5, 6, and 7 to the downside of the Japanese stock market, as well as the Japanese economy and Japanese real estate. It has helped me navigate through the dot-com bubble, which was a hyperwave. It's helped me navigate through the mortgage debacle, which was a hyperwave in yields on certain types of collateralized securities. And it's given me a perspective about what is happening now with many tech stocks, biotech stocks, marijuana stocks, and a number of indexes around the world. And that's what we're trying to get across to everybody else. Once you know what this thing is, it will tell you a lot. So let's just take a quick look at some things. This is the same thing you just looked at, but this is the dot-com bubble of the NASDAQ, and this is the archetype. And what you need to be able to recognize is this form, this acceleration up, where you can just visually see the angles that this is moving up until it finally breaks, goes back up one more time, but never gets to the high. After this break, which is a phase 5, you always get this move back up, and it never gets back to the top. And then you get this very long period of a phase 7 down, back to the archetype. You have this very important phase 1, 2, 3, and 4, a break, an attempt to get back up to the top, which will never get there, and then this very long period down, which is a phase 7. Now, on this archetype, what's important are these, if you can see them, red numbers 1, 5, and 7, and the green numbers 2, 3, 4, and 6. The green numbers are all up. The red are restraining lines, and I'm going to spend 2 minutes explaining that. A lot of people are sending us hyperwave, what they think are hyperwaves, where this phase 1 is all messed up, and therefore the rest of the hyperwave is messed up, and they don't understand that. What a red number means is all the price activity must be below that line. It can never, on a weekly basis, go above a red line. Same thing here, same thing here. So when you draw it, people are drawing it with the price above the phase 1 line. The price is never above a phase 1 line. It is constantly below it the entire time. Not 1 week goes by, and this will last for many years very often. 2, 3, 4, 5, 6, 8, 10 years where price won't get above it. And I've used the examples of the Dow Jones from 1908 to 1922, 14 years, in which the price of the Dow could not get above 100. And the same thing happened with the Dow Jones Industrial Average from 1965 to 1982. For 17 years, the price could not get above 1,000. Both of those were phase one lines. And then you finally break out. Price goes above the phase one line, and then it stays above line 2, 3, and 4. It can't get below it on a weekly closing basis, even once. So a lot of people are sending us examples of what they think are hyperwaves, but all along these lines, there's all kinds of breaks. That's not a hyperwave. A hyperwave is absolutely clean. And so the price is going to come up here. It can go way up here on a phase two, but it will come back and test phase two and not break it. And then keep going, keep going, keep going. And then it will accelerate into a phase three and a phase four. Finally, phase four will break to the downside on a weekly closing basis, and that's the end of the upswing in the hyperwave. Okay. Here is the example again. Phase 1, 2, 3, and 4, 5 down, 6 up, 7 all the way down. Let's look at one from 75 years earlier. Columbia Gas and Electric in the 1920s and the 1930s. It's a perfect hyperwave. Here's the archetype. Here's Columbia Gas and Electric. Archetype, Columbia Gas and Electric. Here's another one, air reduction. Archetype, air reduction. Now, we've shown you over 50 of these from the 1920s and 30s, but we now have over 400 examples, and today, actively, there's 100 going on around the world in various forms, and probably a lot more that we haven't found yet. But I just want everybody to get that mental picture again for those of you who have not looked at the earlier vlogs. Now, in the earlier vlogs, we have one where we just discuss phase 1, 2, and 3, and then we have one where we discuss 4, 5, 6, and 7, each of them about an hour or two long with many, many examples. So I just wanted to show you all of that before we look at this one. And again, to me, it doesn't matter that it's Bitcoin. I know to a lot of people it does matter that it's Bitcoin, because a lot of people want to believe that this is different than all the ones I've just shown you and all the other hundreds that I've seen. It is not. It's exactly the same, where you got a period of time where the price remains flat. You then begin accelerating up in sharper and sharper movements until you get to phase 4, you get the break on phase 5, you get the retracement up on phase 6 where it doesn't make it to the top, and then you go for a very long period of time in what's called a phase 7, and that's where it was still in. Okay, so what I've done is I've drawn a phase 2 line and a phase 1 line on this hyperwave of Bitcoin. And when Leah was introducing this, she said, a lot of people are excited that all of a sudden we're down below 7,000 again. We're at 6,993. We were just up at 7,500 not too long ago. We'll take a look at that in just a moment. But I want to put it in perspective of the big picture, which is forget all of these little movements up and down. And I think a movement from 6,000 to 10,000 is a little movement, even though it's a huge percentage. I think a movement from 6,000 to 8,500 is a little movement. I think the recent one we've just had from 6,000 up to 7,500 is a little movement. I don't really care. I know with certainty that we are looking at a hyperwave that's in the phase 7, which will take it back down to much lower levels unless one particular thing happens. And that one particular thing is that the price is able to bounce off of this phase 2 line, which right now is coming in at about 5,500. We've already been down to 5,780 right here 4 weeks ago. I think what we're about to see is we're going to come down and we're going to test this line, and I think we're going to break it. But when we break it, I don't believe that it is going to stay that way for an entire week. I think we're going to break down through this line, and we will drop all the way down to below 5,000. We'll hit Tone Vay's target at 49.75. We'll probably hit 4,800, which is the Fibonacci line, the last line before it drops all the way down to 1,000. And I think it's going to hold. I think we're going to bounce off of this. And I think we might do it several times. But it's going to eat up the clock. It's going to take time. Either that, it's going to cut right through that line and keep on going. And if it cuts through this line and keeps on going, it's going down to 1,000. Why? Because that's what hyperwaves do. I don't care that this is Bitcoin. Cryptocurrencies are showing that this is correct analysis because so many of them are going to zero already. And a lot of others, even though Bitcoin is able to hold up around this 6,000 to 6,500, 7,000, 7,500 level, a lot of the other ones are breaking down very, very badly, including a lot of the big ones. So I just wanted you to get my perspective on why I'm not commenting every day about all of these little movements that we're seeing, because to me, they don't mean anything. They would mean something if we could get above this high at 8,500. The same way Tone is talking about that, I believe that is probably a correct analysis also. But let's just very quickly now just go through my analytics of weekly charts of Bitcoin. First thing we look at, now we're going to forget hyperwave, forget phase lines. We're just going to look at the technicals of the movement of this particular asset class. And we see that it was in a parabolic move that broke. And in December, it started a downtrend, and the downtrend is still working today. We know that to be true because we can look at a number of tools like the stop and reverse point that says ever since this dot appeared, we've been in a downtrend, except for a very short period where we went from 6,000 up to 8,500 for 4 weeks, and then we broke down again. And we've been below the stop and reverse points for 4 weeks, and we're not even getting close to them. That number is up around the 8,500 level, and that's why I say that's an important level, and I will get excited and get very interested if prices can go that high. But as you know, what we've just seen happen is this. This is what occurred this morning, and this is what keeps happening as we try to get closer to overhead resistance. We simply give up the ghost. Now, that doesn't mean it's going to keep on going. I'm not saying that. I'm just saying that this is evidence when you get this kind of movement after a very long period of flatness. In this case, going back to September the 4th, where we go flat, and then rather than breaking up, you just give all of this activity back. You take it all back in a matter of 60 minutes. And that shows me weakness in the very short term. Now, I'm not going to give short-term directions anymore in terms of what I think the next 5% is going to be. It's gotten very difficult from the perspective that this market, we'll look at a 12-hour chart, has basically not gone anywhere from all the way back here in March. It's run up, lower highs, collapsed to lower lows, run up to lower highs, collapsed, in this case, just barely got down to the 5,900 level, gone up. I believe that we are not going to see it take out these highs of 8,500 before we drop down and take out the 6,000 low. You know that That's been my position for many, many months and continues to be because we're in the phase 7 of a hyperwave. Okay, let's go back to the weekly chart and just very quickly show my interpretation that nothing has changed with this move up from 6,000 to 7,500. So we will take a look at the moving averages, which I call consensio. We're going to take off the price and just look at what the chart is showing us. It's showing that the long-term moving average peaked and is coming down. It shows us that the intermediate term moving average has broken through the long term and the short term and has gone flat to slightly up. And it shows the short term has, ever since April, just been flipping back and forth with lower highs, lower highs, lower highs, lower highs, and lower highs. So my reading of this is until price can get back up above the long-term moving average, which is around 7,800, there's no chance to turn the long-term back up. And therefore it will continue to descend. Now it's flattening out here because the price, the moving averages on the shorter term, the 2 and the 7 have flattened out. And that's because the price is flattened out. So we are all waiting for a significant move. And until that happens, I'm pretty bored with what I'm looking at. I know what it's telling me. I know where it's going. I know it's going to take a long time to get there, but nothing has changed from a fundamental point of view. We had the Bollinger Band analysis by Tone this morning, but I'll just take a quick look at it. Put the candlesticks back on. And I've been saying all through this down move that the price has got to get above on a full candle basis to even have a chance to get back to the top line. And it keeps refusing to do that. Refused to do it here, refused to do it through all of these, refused to do it here, even though it tried valiantly, it could not do it. It hasn't even tried this time around. It got up to it, and then we had the action of the last 6 hours that just knocked it right back down from the middle line again. I'm not predicting, and I'm not saying that that means it's going down to the bottom line right here, right now, but the bottom line's at 5,200. And I think that's where we're going. That, remember, will cut through my phase 2 line, which is coming in at 5,500. And then things will start getting interesting, and we'll talk about them in detail at that point, but not now. This is not interesting action in any way, the way I read these charts. We do have a positive move on the MACD for the first time over the last week and a half, a couple of little tiny green dots back over here. But until we can break through this midline, we're not going to see this go anywhere, in my opinion. But it is no longer bearish. I would consider the MACD to be neutral. I do consider the relative strength to be bearish, and I've said that over and over again. I might very well prove to be wrong about my analysis that all of this activity on overbought that went on the upswing needs to be compensated for by going back below 30, and I think below 25, and maybe even below 20 on a capitulation to the bottom. Right now, what we're doing is we're just messing around in the middle at 45. We tried to go up once when this price went from 6,000 to 8,500. We turned the RSI up, got back to the midline, and then it gave it up, which is what happens in a downtrend. We've tried it again. We've gotten up as high as about 4,800, 48. And now, just because of the last 6 hours, we've turned the RSI down again. I believe the RSI has got to drop from 45, where it's currently sitting, all the way down below 30 to have any chance of talking about a bottom and the end of a phase 7. And we do not have that. We have not had that. And that's what I wanted to cover today. So what I am going to do is I am going to turn it back over to Leah and see if we've got any questions or comments.
We do. Wow, I like that. This one's on. And people in our live chat, if you guys want to send me some real quickly, I'll take those as well. So Ty, actually, these are not related to Bitcoin, but they're interesting.
Good.
And they're also not related to Hyperwave, but
Wow.
let's have some fun. What do you
That's
think?
great.
Ah, look at you smiling. Okay, what criteria does Mr. T sorry, you know what? I think that's so funny. What criteria do you look to short trade? Now, I wasn't able to find out if that means Bitcoin or traditional markets, so
Yeah,
I'll let you have it.
That's fine. I'll answer it both ways. I would short every crypto in the world other than Bitcoin at the right place and the right time. I would never short Bitcoin. So when I say, that we got out of GBTC, Bitcoin related, back in December and early January, and we've been out ever since, I have not been short. I'm not trying to make money for myself or my clients betting against what is going to be someday a very important asset class at much, much higher prices. And I've said over and over again with Bitcoin specifically that it can happen overnight. I can't come up with the scenario that would cause that. Well, yes, I can, but I'm not going to talk about that. There's a number of things that could happen that literally overnight could see Bitcoin at 50,000 from here tomorrow morning. And that's why I would never short Bitcoin. It is substantial. It is important. It is going to play a major role in the world macroeconomic picture. Simply not yet, in my opinion, because of this whole hyperwave structure it's in, which back in October, November, December of last year, I never would have been saying. I thought we were going to go much, much higher. But I didn't understand how bad the ecosystem of the cryptos were until we got into the fight over Bcash, and we had the disappointment of the CBOE and the CMT, and people being unreasonable of how they're putting fundamentals together with technicals. This seems to be a group of people, meaning the ecosystem, that has a lot of passion and a lot of fervor and very little investment sense. And that all gets worked out, and it is getting worked out, and that's why we ended the up part of a hyperwave, and we're now giving back very large portions of all the gains that people have had. Now, talking shorting in general, the best time to short is if you know you're in a hyperwave and you know that you've just broken a phase 4. Now you've got years ahead of you of holding a short position. You know it's just going to keep getting better and better for you. And that could be in the NASDAQ, it could be in the Japanese stock market, it could be in the gold market, it could be in any market at all, except, in my opinion, the Bitcoin market. It could certainly be in the Ethereum market or the Litecoin market or the Monero market or the Cardano market or 1,000 others. That's a wonderful time. Unfortunately, none of those ever entered a hyperwave. Bitcoin's the only one that did. But what I'm saying is, number one on my list for shorting would be as you're coming off of a phase 4 into a phase 5, because it's predictive. You know where it's going to go. So that's a gift. And the problem is you could spend the next 5 years and never see another one of those. They're very rare. Even though we've found a bunch of them, it's taken a lot of people a lot of work to find them. So it's not like every day you can pick up a newspaper and find one of these things. So forgetting hyperwave, then simply the best way to short is with a trend change. You use Consensio, and when you've been trending up for a matter of weeks or months or quarters or years, it's going to come to an end. Show me something that hasn't come to an end in history, that is price denominated. It doesn't matter if it's Google or if it's Amazon. Yeah, if you step back far enough, everything that is at highs right now looks like they've always gone up. But get specific, like on Google, where my mother bought it at $738 and spent 5 years underwater because it couldn't get back over that. And it dropped all the way down into the 400s. Take a look at Apple stock, which was flying high and dropped down to 16 bucks a share after they fired Steve Jobs. And then look at its ride back up to where it is now. Take a look at IBM or Microsoft, or take a look at General Electric. General Electric was the only stock in the Dow Jones Industrial Average as of a year ago that had been there since the 1930s. All the others in the Dow Jones are brand new stocks. IBM was not in the Dow Jones, but we showed you a chart of IBM back in the 1920s and the 1930s. So it doesn't matter what asset you're talking about, or stock or index or commodity. Anything that's in a strong uptrend will stop that strong uptrend. You can recognize that through Consensio as the pieces begin to shift, and that's the perfect place to short. And to me, it's very simple that way, and you can apply it over and over again.
Love it. Now we're getting some awesome questions, and I have some questions of my own.
Great.
So I really like these questions. Good job, guys. Which one do I want to start with? Okay, and I may rephrase some of your guys' questions. So, well, I'll read this one straight. I think the second part of this question is most important, but I'll read all of it. What are the chances, percentage chances, of Hyperwave 7 going all the way back down to wave 1 and restart the next hyperwave again? But does the next hyperwave then exponentially outperform the previous one?
Great questions. The probability at this time, in my opinion, is 80%, or 1 out of 5 that it won't happen, that we go all the way back down to 1,000. It's overwhelming because it's so rare for a phase 7 not to go all the way down back to phase 1, and phase 1 is at $1,000. That's why I've said $1,000 back in October, November, and December. If this thing ever breaks, that's where it's going. In December, January, February, March, April, May, June, July, August, September, I have said the same thing. The target's 1,000. I'm not pulling that out of the air. It's because that's phase 1 of a hyperwave. And 8 out of 10, at least, go all the way back down to phase 1. There's a small probability that a hyperwave in phase 7 will stop at the old phase 3 line. We did for 11 different times, starting in February, we tried to hold the phase 3, old phase 3 line of the hyperwave in Bitcoin, and we did it successfully and sometimes spectacularly. In fact, I was jumping up and down the week that we broke down through phase 3, and then watched as it turned around hundreds and hundreds of dollars below the phase 3 line and shot back up above the phase 3 line by Sunday's close at 8 o'clock. At the time, it was 7 o'clock, I think, because of the time difference. But my point is that these phase lines 2 and 3 tend to be very resilient, and sometimes they will stop at phase 7, but not very often, percentage-wise. And phase 3, after trying 11 times over months, gave way, and then we fell all the way back down to where we are now, between 6,000 and 7,000. Phase 3 line keeps going up, but it doesn't matter. The phase 3 line, when it's broken on a weekly basis, disappears in terms of what it will do to the price at a later date. But we still have active the phase 2 line. And when I started talking about the phase 2 line, it was below 4,000. And then it got up to 4,100 and 4,200. And I kept saying, this is very interesting because it's moving up, but Tone's phase line, or excuse me, Tone's line at 49.75 isn't moving up. It's a horizontal line. and the Fibonacci line at 4,800 is not moving up. But my phase 2 line is moving up. And what will happen in the future is that phase 2 line is going to catch up with the Fibonacci line at 48, and will catch up with tone at 49.75, which it's done, and will go above 5,000, which a lot of people are looking at as a round number that might hold the price. But now it's at 5,500. And we've already been at 58, below 5,800 on Bitcoin prices. So our eventual target of touching that phase line is within nickels and dimes, and we will be doing that. And I don't know when and how. Maybe if Bitcoin prices can stay up at 6,000, 6,500, 7,000 and just go sideways, the phase line will catch up to it. That's possible. I don't think that will happen. I'd put a small probability on that. But so the long answer to your question is there's a much greater probability that we're going to 1,000 than we're going to be able to hold the 4,900 to 5,300 line. And it's about 4 to 1. I would put it at about a 4 to 1 probability that we go to 1,000. I would put it at a 1 in 5 probability that we will be able to hold the phase 2 line. Not initially. I think initially we will hold it, but the second time, the third time, the fourth time, at some point, I think it'll break down.
Awesome. I like a lot of these new ones. Cool. Quick note on GBTC, simply because we always get questions on GBTC.
Yeah.
And we don't often enough maybe talk about GBTC. Just, I guess, a quick note on, should people be interested? What are we seeing? Premiums?
Absolutely. GBTC is the way to play Bitcoin. It's the only way right now, in my opinion. I don't like Bitcoin for Bitcoin's sake because I can't buy it. I can't sell it. I don't trust the exchanges. I don't trust the miners. I don't trust the hash rates. I don't trust what people say. I don't trust anything about the ecosystem, which is one reason we're in a bear market, because 99% of the people in the world agree with me. 1% of the people that play around in the ecosystem make excuses why it's okay to do this and do that, and don't worry about this hack, and don't worry that these people lost $35 million, and don't worry that everybody can lose everything. That's all nonsense. And until more and more people realize that, we will be in a bear market. But you do have a way of playing Bitcoin through GBTC, and it's the only way right now, and you can use it as an unbelievable tool. But the reason I haven't talked about it is because Bitcoin's been going down since December. I'm not going to jump in and out of Bitcoin or GBTC. It's boring to me because I know where it's going. So all these little pops, up to 10,000, up to 8,500, up to 7,500, now struggling at the 7,000 level, are uninteresting to me. To me, what's interesting is the U.S. stock market, and making sure people are out of gold and precious metals, and being interested in the currencies, and being in tune with macro movements that are taking place. Now, having said that about GBTC, GBTC's premium will drop to 0, and instead of trading up at $9.50, it will be trading down at 7 or 6.5 overnight if a new ETF comes along. But I don't believe a new ETF is coming along. Therefore, GBTC is holding its premium fairly decently, but people are calculating that premium incorrectly. Somebody was talking about a 65% premium. Take a close look. It dropped all the way down to 28 in the last 2 weeks. And a part of that, I think, was the fear of an ETF being approved. But in any case, if an ETF comes along that does not have a premium or discount to the underlying Bitcoin that is being held by it, then I will never use GBTC again unless it drops down to a 0 premium. I will use the new ETF. So that's my views on GBTC right now. Now, let's just take a wacky assumption. Let's assume that phase 2 holds and we're very close to a bottom, an all-time bottom, meaning all-time is not going to go any lower than, let's say, 4,800, 4,900, 5,000, pop back up, close above the phase 2 line. I will be all over GBTC for myself, my clients, my family. We will be getting in with both feet and in much larger portions than I would normally do for any other asset class. But I would be doing it using GBTC. I wouldn't be doing it buying Bitcoin. So that's a possibility. And I'm ready to do that. And I'm watching it very carefully. But now remember, one bounce off of the phase 2 line is meaningless. It'll be fun and important, and I'll be excited because of what it says about Hyperwave. But I'm not going to jump in until a number of other things happen. I'd like to see 2 or 3 or 4 tests of that phase 2 line over a period of time before I'll jump in. I will take small positions in GBTC, but that's about as far as I would go.
Awesome. And so we've been getting interesting charts about Square, etc. Tone, you watch all our videos, gave me a homework assignment, if you remember, even though you are my partner, and Tone too. I do love Tone, obviously, of all very interesting potential proxy trades on the NASDAQ. So if you want to make a quick comment about any potentially Square, otherwise there's a bunch of other great questions. Otherwise, to the viewers, it may be of interest that we could do an entire show on kind of potentially proxy traded.
Yes, there are, great questions. Square is beautiful. And there are a number of hyperwaves obviously going on right now in phase 3s and phase 4s that have to do with NASDAQ and NASDAQ 100 stocks. There are also some great examples of ones that have broken down from their 4s into a 5. Netflix is one of them, but there are a number of other ones that have also. One of the great, this is a whole show, but Hyperwave to me is a massive change in the macroeconomic condition somewhere, but it will itself pull along things that are related to it. What we just showed you a little while ago was a hyperwave in the Dow in the 1920s that began in 1922 after a phase 1 from 1908 to 1922. But that was the Dow Jones Industrial Average, the index. And that index then from 1922 all the way until 1929 went up through phase 2, 3, and 4. But guess what? The Dow Jones is made up of 30 stocks, which means that a bunch of those stocks were also in hyperwave. Same thing with the NASDAQ today. The NASDAQ 100 is in a hyperwave, which means that a bunch of those 100 stocks are also in hyperwaves. But they wouldn't be in hyperwaves if the NASDAQ 100 wasn't in a hyperwave. All the Japanese stocks that were in hyperwaves would not have been in hyperwaves if the Nikkei had not been in a hyperwave. So it's the big, massive thing you've got to understand that's going on that creates all of these smaller hyperwaves under it because they're pulled along with the macro change that's taking place. Now, Bitcoin is a great example of that. And that's why I'm so excited that Tone is in Paris at a remaking of the Bretton Woods conceptually from the point of view of a bunch of ministers, finance ministers, economists, and Tone is going to be speaking there too. Safadine we had on our show because of his comment about what a gold standard would mean for Bitcoin. That's my point. Bitcoin is important because it's talking about a massive macroeconomic change that could be taking place in the world, and Bitcoin either will or will not play a role in that. Up till this point, it has been teasing everybody that it could play a role. A lot of people absolutely believe it does, but the world doesn't. And it gave a pretty good shot by running up many thousands of percentage points in a very short period of time before it came to its senses, and now is going back to where it belongs, which is cleaning out the fundamentals of the system and getting ready for the potential of another move up. But my point is that Bitcoin spawned thousands of related types of quasi-securities and illegal securities in the form of alts and ICOs that tried to jump on the bandwagon of what Bitcoin stood for on a global macroeconomic basis. And one by one, they're failing, but a whole lot more of them need to fail to clean the way for Bitcoin to play the role that it might play if the gold standard does not come back. And that's why Leah and I did a whole show on that. That's why we had Saifedean on it. And that's why I'm very happy that Tone is over there hearing what other people are talking about, having to do with the exact same subject that Leah and I spent a couple of hours talking about, which is gold standard and Bitcoin.
So as a follow-up to that, and thanks, George, for a good question, is, and we did spend an entire show on this when I was in North Carolina, I remember that. Do you think the whole crypto ecosystem is also in a hyperwave or just Bitcoin? And my also interest in this question is just given that we did that show, it was before I hurt my knee. So I can tell you it was at least 7 months ago.
Yeah, it was interesting because somebody asked about the hash rate being in a hyperwave. And in our hyperwave research group, we really had to think about that. And that's what's spawned the show that Leah and I did. I have not found any individual cryptos other than Bitcoin that are in a hyperwave, including GBTC, which is really still confounding to me. But regardless, if Bitcoin was in a hyperwave, therefore fundamental things such as number of miners, hash rates, certainly the number of adopters, the number of individuals, the cap rates, all of those could very easily be in a hyperwave, but not the crypto ecosystem. That's all noise and fluff. But things directly related to Bitcoin itself and what it stands for, and the things that it takes to get it to where it needs to go, could easily be in hyperwaves. Hyperwaves do not only occur with price-related activity. A hyperwave is simply a form of exponential growth that can occur across many, many things other than just price-related things. We'll try to do a show on that, or teach some courses on that, because it's really fascinating. And I'm learning as we go about how hyperwave works in the real world and the natural world, just the way Fibonacci works not only in mathematics, but in the real world and the natural world in a number of different ways. I think the fundamentals are basically the same.
Awesome. Two more questions. One, obviously, given my background in macroeconomics with the World Bank and everything, I love this, and I'm going to try my hardest not to say a word and put myself on mute. Do you think the developments happening in Iran with cryptos will bring Bitcoin out of the bear market?
Yeah, there's a lot of speculation of not only Turkey, but Venezuela, now Argentina, Iran. Sometimes a crisis can be the lever that pushes the snowball over the top of the hill. I doubt it. Malaysia back in 1997, and then Indonesia and some other currencies got themselves into a lot of problems, and that really started a currency crisis around the world, which included the Soviet Union having to, for the first time in its history and only the second time in world history, defaulting on sovereign fiat for a short period of time, which then resulted in long-term capital with its Nobel Prize-winning economists and mathematicians blowing up and almost taking down the financial system here in the United States. Long-term capital was a hedge fund that was heavily leveraged, but it was based on spreads between currencies, and also had gone deep into the Russian financial situation and was on the wrong side of it. Okay, so the question is, the fact that people are under such stress and don't have any way out in Venezuela because of inflation and currency devaluation, and in Argentina, Turkey, and even Italy to a certain extent, but certainly Iran. Those sorts of situations have occurred over and over again all over the world throughout the last 100 years, where a country is under stress because of political problems or military problems, and almost never results in wider spread problems. I would suspect the same thing is true in its relationship to the adoption and the use of Bitcoin. I'm not saying that people in those places aren't well advised to get the heck out of their currencies to the extent they can and get it into Bitcoin, because now, you know, all of the benefits of Bitcoin become actively more important to them than they are for everyone else in the world that doesn't get what this thing really is. And the ecosystem's so messed up that unless you're under stress and need to use Bitcoin to save your life and the life of your family in terms of getting food and water or moving from one place to the other, it's too much of a hassle to play the game. It's just as much a hassle for every one of those individuals, and God bless them if they can figure out, you know, the 650 steps you've got to take to get a currency into one of these things without losing all of your money. So that's my take on it.
Interesting. I have a different take. Maybe we'll do like a really interesting vlog on that one. Okay, so the last question we got, I think that we'll take, given that we're going on an hour, well, maybe two, is that someone talked about precious metals, and you have a very strong background in precious metals. Now, on my very long adventure trying to get here today, I will fully admit to everybody, and I hope Andreas doesn't hear this, because I am the biggest fangirl ever of Andreas Antonopoulos and heard so many of his videos back and forth, because at least I downloaded all of them. Now, he made a lot of similarities to the Bitcoin mining process and its cap, and how the happening and everything is in alignment with precious metals. Now, what are your thoughts regarding Bitcoin being similar to precious metals in regards to financial speculation?
I think the best way to understand that is to read the Bitcoin Standard by Saifedean. He was so meticulous in the first, 150 pages of building the background of gold and silver as a hard currency and how it relates to fiat currencies and paper money, and now how it relates to Bitcoin. And that's really what this question is getting at, is what are the similarities between speculating in the gold market and speculating in Bitcoin. And you really need to understand all of that to be able to answer that question properly. My thinking is that Bitcoin is very different than gold and silver in the monetary system, but or has the potential to be. It has the elements built into it which could completely replace the need for any other kind of a hard money. But so few people know that and realize it, that from a practical matter and a political matter, the probability of that happening before we go back to gold is very small, in my opinion. Particularly when you see conferences going on like the one Tone is on right now. I suspected that that would begin happening. I think there's back channels that have been doing that for the past 10 years politically, major countries, but not in the press, and nobody will give interviews about it. But it's just logical, because we all know, all of the listeners and everybody in this ecosystem and many, many people around the world know how bad the problem really is with fiat money and credit and debt. But that also means that all of the people in charge of fiat money and credit and debt know it. And they're looking for solutions. They don't want it all to blow up. And so because of that, my simple answer is that qualitatively, Bitcoin is significantly better than a gold and silver or just a gold standard. Significantly better, much easier to use once all the logistical problems are worked out, which they will be, just have not been yet. And so in terms of speculating on them, right now in 2018, the difference between the returns you can get in the gold market and the Bitcoin market are not in the same universe. You can get much, much better returns if you time your purchases and sales of Bitcoin compared to what you can do in the gold market and have ever been able to do in the gold market. I mean, the run up in gold in the 1970s went from $35 to $800. Well, you know, Bitcoin does that in 6 weeks. It took 10 years for gold to do that. That was the biggest move ever in the history of the gold market. Now we've had a nice run from $265 gold up to $1,900, which sounds wonderful compared to every other asset class in the world, but is literally nickels and dimes compared to what you can make in the Bitcoin market. So as a speculative vehicle at this point in time, Bitcoin is far, far greater. Now, here's the problem. Holding Bitcoin is not what we're talking about. Speculating or investing in Bitcoin is, which means knowing when to buy and when to sell. In the gold market, if we go to a gold standard, we are going to get approximately an 8x move overnight, in my opinion. And you've got to be ready for that. One way to be ready is to own some of it. That's not my way of doing things. My way of doing things is knowing that that possibility is sitting out there and then using tools such as Consensio to watch the price of gold, which is now in a downtrend. And when it is no longer in a downtrend, that's when you want to begin to accumulate it. And then we'll just have to see what the future holds. I believe we will go to some kind of a gold standard to take care of the problems that have been created over the last 40 years with fiat money, credit, and debt. And that will not kill Bitcoin, but it will just mean that it will take a very, very long time for it to achieve its potential. If we can take care of the short term in Bitcoin in the next year before we run into economic problems that need a gold standard, and I believe that's very probable, then Bitcoin can show its thing without having to worry about the gold standard. And if in that second run, actually the fourth run of Bitcoin, that will be a very big one off of a bottom of 1,000, where we go up to 50,000, then 100,000, then 250,000, then 1,000,000. That will end the logistics have been worked out about all the things that bug me about the ecosystem. Then Bitcoin could very easily replace the thinking of many people that we need to go to a gold standard. So those are kind of the two binary outcomes, in my opinion.
So let's take this last one. Do you think hyperwave is to exponential trends what Elliott wave is to Fibonacci?
Wow, that's a great question. And there's no way I could answer that now, but I will definitely think about it. Elliott wave has a lot of similarities to hyperwave, and I know that because I had a long talk with Robert Prechter about that when I showed him a hyperwave, and also to a guy named PQ Wall, who is a brilliant technical chartist. When they saw the hyperwave, Bob Prechter just said, "Oh yeah, that's one of the forms of Elliott wave, showing all five of the main movements of an Elliott wave in a primary count." And I'd looked at it and I thought about it, and I think he's right in a lot of aspects. Fibonacci is not a direct, the golden ratio and the Fibonacci ratios are the thing that are important in Elliott wave, not Fibonacci lines or anything like that. So there are parts of all technical systems that reinforce other technical systems, but I will think about that. That's a great question.
All right, Ty, we're going on an hour 10. Maybe let's take one last one. Let me think. All right. I'm gonna be obnoxious.
Okay, great.
Okay, cool. That's pretty typical. You typically have to deal with me. So this was part of what was in the latest show with Safe Fahim on the morning brief, and everybody, I totally recommend it. It was me, Tone, and Safe, and it was really, really, really fun. And just so you know, he has a Patreon account right now where you can get a monthly newsletter. It's really, really cool. And one of the topics that we discussed was the financialization of Bitcoin and the thoughts on if ETFs can be unbacked or not fully backed by Bitcoin, and what if Wall Street banks tried to do it? And I think this is a great question that I would love to hear you answer, especially with our kind of pessimistic timeline on ETFs. But specifically, what are your thoughts on, can they be fully backed with Bitcoin or unbacked, or I'll let you have it.
Yeah, absolutely. They can and they will be. And it will not be a positive for Bitcoin, but it'll be a huge positive for the financial institutions, because that's what people would prefer to use, is something that is regulated and traded on an exchange. And just as we now have 2 times gold, 3 times gold, inverse 2 times gold, inverse 3 times gold, inverse 3 times the NASDAQ, 2 times the NASDAQ, And you can go onto the futures exchange and you can be 2 times, 3 times, 5 times, 10 times, 50 times, 100 times. You can go onto BitMEX and be 100 times leveraged. And all of those are superior to the underlying Bitcoin itself, which is a 1-to-1 situation. And that's where Wall Street tends to move. And they will move there. Hopefully the SEC is going to be on top of it, but to a certain extent, there's no way they can be. There's a whole lot more clever people, thousands for each person sitting at the SEC, that are looking for ways, like in the mortgage market, to dice and slice and make money on every new innovation that they do. And that will happen. I have no idea what the result will be. I know what the end result will be, and it will not be pretty for those institutions and many, many investors. And Bitcoin doesn't care. Bitcoin will just do what it's going to do, regardless of all the securitization around it. But so my prediction would be that it is going to happen, and it will be very, very popular, and a lot of people will get hurt, but that really has nothing to do with Bitcoin.
All right, maybe we let people go for today, but
great.
I hope that, and I think that Tyler and I are going to be doing lots of videos even while I'm in Europe, and it's going to be a lot of good fun. And for people who have lived in Madrid or know Madrid, just going to shill my business school. I went to Instituto de Empresa IE here, and I'm like down the street from where I used to live. If you guys know Barrio de Salamanca, I lived on Calle de la Gasca, and I'm currently on Calle de Serrano, and I just like am reveling in it. But tomorrow I do leave for Barca, so I'm just going nuts. But thank you everybody for watching. Ty, thanks for your brilliance.
Thank you very much, Leah, and thank you, everybody. We'll be talking again.
Yeah. All right. Thank you, everybody.